In this video, we review Funding Circle. Have you used Funding Circle before? What was your experience? Leave your Funding Circle review in the comments section below. Funding Circle, a peer-to-peer lending platform, has gained popularity by facilitating small business loans since its inception in 2010. What many may not know is that it was one of the first peer-to-peer lenders to go public on the London Stock Exchange in 2018. Additionally, its approval process is fast, with some borrowers receiving funds in as little as 48 hours after completing their applications. Despite its efficiency, Funding Circle has a mixed reputation, with notable advantages and disadvantages. The platform offers loans ranging from $25,000 to $500,000 for standard term loans and up to $250,000 for lines of credit. Borrowers typically need a minimum credit score of 620 for a term loan, though SBA loans require a score of 650. One of the company's standout features is its transparency regarding fees, with no application or prepayment penalties. Borrowers only face a 4.49 to 10.49% origination fee and up to 5% late fees for missed payments. While these terms appeal to many small business owners, some feel the APR rates, which can climb as high as 30.12%, are steep, especially for those with lower credit scores. The platform has garnered positive feedback for its straightforward application process and responsible lending practices. Many users appreciate the speed at which loans are approved and dispersed, often within 2 to 5 days, which makes it a viable option for businesses in need of quick capital. For entrepreneurs in industries like speculative real estate or gambling, however, Funding Circle's refusal to lend in these sectors can be a limitation. On the flip side, some users have voiced frustrations. Investors who fund the loans have reported dissatisfaction with the platform's shifting policies and declining returns. Many complain about the lack of transparency regarding debt defaults, with some seeing their investments become illiquid. Long-term investors, once happy with the attractive returns, now criticize the platform for the increasing number of loan defaults, which have locked up their capital. Some have waited over a year to retrieve only a fraction of their original investment. These complaints about poor liquidity have tainted the experience for many. From a borrower's perspective, the high origination fees and potentially steep APRs are notable drawbacks. Borrowers with weaker credit histories are likely to face higher costs, which could make it difficult for small businesses with tight margins to manage their repayment schedules. The requirement for collateral on larger loans can also be burdensome for some businesses, adding an additional layer of risk. In summary, Funding Circle is a solid option for small business owners who need fast access to capital and meet the platform's credit requirements. However, potential borrowers should carefully consider the high APRs and fees before proceeding. Investors should be cautious, especially considering the platform's history of loan defaults and liquidity issues. For those looking to diversify their investment portfolio, the peer-to-peer lending structure could offer decent returns, but the risks, particularly in times of economic uncertainty, should not be underestimated.